Welcome everyone to my new tutorial video presentation on how to do futures trading on a MEXC exchange. If you don't have an account, make sure to utilize the link in the description area or comments area for a bonus up to $1,000. Now, you must have everything valid before functioning, such as signing up and having your account verified. No KYC needed, just with your email. Therefore, the resources must be in your account. And another thing that you gotta do is to move your resources into your futures wallet, which is something that I can share with you. So from the top right corner, you have the wallets, and then you have futures right there. If I click on futures, it's gonna drive me to the page with the assets and futures, where I don't have anything right now because my resources are sitting in spot. So on the top right corner, I have the transfer, and I have the ability to move the resources from spot, select basically what resource do I want to move. Usually we trade from USDT, so this is what you need in order to perform futures trading on the market, USDT. I'm selecting that. I have a balance of 97. I'm going to click on all and transferring that into futures from spot. The same thing is needed to transfer back when it comes down to trading on spot market, right? You cannot have your resources on the futures wallet. So, I did transfer the resources. They are going to appear right here. It's just a little bit delaying out here. And we are looking forward on the top left corner. We have the futures tab with a futures overview, perpetual futures, which we are actually looking for trading. The general one is perpetual futures with USDT and perpetual futures contracts. This is what basically we are performing every single time. If you're using USDT, that's where you have to go. It's perpetual contracts because they do not expire. It is a way of calling them. It is a way of putting things together and making sure that you have basically the ability to perform with the trading. Now, on the dashboard area of a page where trade can be executed, it is exactly where we are right now. I would like to give you a quick understanding and tutorial on how does the whole platform works on a page of a futures trading perpetual contract under USDT. Simply said, what do we have to know is the wallet representation, that on the bottom right corner you have the available margin, total equity, and the wallet balance. Right now you can see it's $97. This is what I have moved. And the unrealized P&L basically, which is represented right there. You also have the ability to deposit cryptocurrency on the platform with that, or transfer from your spot into the futures wallet, which is something mandatory in order to have resources to perform. Now, this transfers from a wallet to the other has no fees. You don't need to be scared about, you don't need to be afraid about transferring back and forth as many times as needed. Beautiful. What other things are right there? Well, the most important one is to make sure that you're on the right page for the right cryptos that you would like to trade. A lot of the people struggle with that. So top left corner, you will be able to see the pair we are looking at. Solana against USDT. This is the price section. That's the change for the past 24 hours. Index price, fair price, which is a little delayed. The funding rate and the countdown. It's important to know about the funding rate, guys. I'm not sure if you're familiar with the concept of the futures trading, where you get the ability to select a leverage on your initial margin. So that is not coming for free. That it comes with a funding rate, which is being charged from you every 8 hours, simply by the platform for giving you access to leverage. So in other words, the funding rate is right now with the plus, as you can see it right there. I'm not sure, it's written so small. I hope you guys can see that. Or I'm trying to make this a little, let me just try to make this a little bigger like that. And this way you're supposed to see it very, very nicely. Beautiful. I think this way is a little bit better, right? So funding rate plus 0.01%. When it's with the plus at the beginning, always the ones that are longing the market or sitting in long positions at the time the countdown is going to hit 0 will pay the funding rate. The ones that are shorting the market will get paid in those conditions. When the funding rate is negative, which starts with minus, then the ones that are shorting the market are paying the funding rate, and the ones that are longing the market will get paid by holding a position. You always get charged or get paid when the countdown reaches 0. It is just 13 minutes to go, guys, out of the 8 hours, that is the mark, in order for this countdown to reach 0, and then people that are in long positions will get charged basically with 0.01% of their total size. What does it mean, a total size? It means the size after it has been leveraged. So for example, if you have an initial margin of $1,000, but you're going in the trade with a 10x leverage, then your total size will be $10,000. So the funding rate will be charged off your total size of your trade, not from your initial margin. Attention, please. And it's pretty much obvious. It's basically simple. You get that resource, you need to pay for that. Obviously, this costs are very small, guys. Now, this is something that someone that is a beginner needs to know about it, and it is very important. The next thing that I wanted to talk about is basically you have the ability to do here charting, to do technical analysis, and so definitely not suggesting to use this specific range. We need to use professional platform, usually tradingview.com, for technical analysis, where things are having the ability to be done through majority of the indicators, as well as the settings can be done correctly and many other things that are needed. So when does the platforms are giving you the ability to see the technicals? I mean, it is something really for just a minor outcome. However, you have the order book right there with trades looking for selling or trades looking for buying. The green ones are the ones that are aiming to buy. The red ones are the ones that are aiming to sell. You see the volume, you see the quantities, and I'm trying to explain it. You see also the market trades, which are trades which have been performed basically on the market in this specific pair. And then you have the ability to execute a trade, which is going from the top right corner. You have the open tab and the close, right? So the first thing that we must do is go with the open, because we're looking to open up a position. Now, do I want to trade on Solana? The answer is no. I'm going to get out of this right now. How do I change assets? Well, right here on the top left corner, while you just hold your cursor over the asset, you're going to get all the options available out there. So I want to make sure I'm sitting in the USDTM category. And I'm going to search for the trading pair, which is already at the top, BTC USDT perpetual. This is how they are called on futures market, with perpetual at the end, because like I said, their contracts never expire. This is how they must be called. Now, no issue at all between the BTC. This is the real Bitcoin. It is not any form of a copy or so. It is what it needed to be. BTC USDT, I'm going to click on that. By the way, if you click on this little star, the token is going to become automatically your favorite. Just bear with me a moment. I can click on this little star and it becomes my favorite, and it will appear right there in the tops. Beautiful, as you can see it. Now, I made sure I'm on the right page. I want to open up a trade. The next thing is with the isolated. So let me talk to you about the isolated and the cross type of margin mode you can have. It is a huge difference between, and you need to understand the differences in order to proceed correctly. There's also major risk if you don't know what are you doing, which is why I'm suggesting people about the education, one-on-one coaching directly with me, where I'm taking you by hand and teach you how to trade. We have this on my platform. You can find out more. You can schedule yourself a free call with me on Calendly about the topic. So let's get back to our isolated and cross. Now, the isolated type of margin mode is basically where you isolate the initial margin from your whole wallet balance. And it's simple. You have $100 in your wallet balance and you want to dedicate $20 to that trade, which means those $20 will be isolated in the trade, cannot be utilized for other trades. That specific margin is isolated in the trade and it's only dedicated to that trade. If the trade is getting liquidated, because the market goes against your position and you don't exit earlier, so it touches the liquidation price, then you are going to lose the isolated margin you dedicated. Attention, please. So only what you dedicated to that trade, which is your initial margin and it's isolated, you will lose that. You don't lose anything else. But when you do cross type of margin mode, you're actually dedicating towards the trade your entire wallet balance of the futures. So this is very important, because when it comes down to having the market going against you, the platform will consider your entire balance of the futures that you have as sort of a large bag from where they can sort of take more and more money that's needed, right? If you don't have margin to hold up your trade, they will take money basically, and your estimated liquidation price will be calculated based on your whole wallet balance of your futures account. This is something everyone needs to know, due to the fact that you might get yourself surprised in a cross trade, in a cross type of margin mode, and then get your whole wallet balance wiped out without understanding the reason and the purpose of that. A lot of the people went through this, which is why you want to isolate it. You know exactly, this is how much I can lose if I am getting liquidated. I don't want to get liquidated. I'm going to use a stop loss. I'm going to control my losses. You can also control your losses with a cross trading. You know how? Simply, you don't put money in the wallet. You keep it on spot, because it's not taking from your spot wallet. This is only taking from your futures wallet. So you don't put your resources, all your resources in the futures. You simply put in your futures whatever you want to dedicate to that trade. You kind of isolate it that way through that behavior. It's possible as well. Or you simply, or just like we use as traders, we use stop losses, guys. We use stop losses. We sell a lot earlier than the liquidation price because we don't want to lose the whole size of the trade. We can control the losses. And as a trader, I'm telling you, every single trade is calculated from the very first second until the latest detail before execution, such as targets and potential losses that we could have. And we only act if we are in a very strong domination, heavy advantage towards the market. So we don't act other than that, which is why I'm telling you, education is very important. The proper education. This is not how you become a trader by opening a trade. You need to know when to open up a trade, when to close a trade, risk management, and all the other things that are needed, a comprehensive process at the end of the day. Now, let me just get back to this and be on the topic straightforward. This is basically the isolated and cross, very important to clearly get the idea. Next to it, to the right, you have the leverage size. So you can decide on the leverage you want to go with. The platform will basically tell you the maximum size at the current leverage you can have right there. So it's not like you can go 100x leverage and you can have an unlimited total size. The platform will limit that, to 105 Bitcoins. You cannot have more than 105 Bitcoins on a 100x position. 100x is great because it's great as a size, but it's not easy to be trading, and the funding fees are going to be bigger due to the fact that the platform is giving you a margin, which is, if you put in $1,000 as initial margin, you can isolate that, no problem. But you select 100x, you're going to trade with $100,000, right? And you're going to see how nice and fun is that. But let me tell you that you're going to pay a funding rate towards the money you have received of $99,000. So your percentage will be calculated towards that 99 grand. So if you have more money, then you can better utilize a lower leverage in order to avoid high funding rates. And utilize basically more margin from your balance instead of going with the high leverages. And on top of that, we as traders, we don't utilize, depends what kind of trading do we do, but we don't utilize leverages that are crossing 10x in 99% of the times, because they are not efficient and they're not possible to be controlling the trades at an efficient way to make money over the long term. You can speculate, hit and run, and have a good time on a 20x for once or twice, enjoy like a gambling way, but this is not trading, guys. People confuse that, and it's something else, which is something at the end of the day that I do not suggest. Now you can go by, let's put on a 10x here and confirm it. So now we will have the ability to adjust basically our position and trade for the next things as well. which means that I can sit away, open a quantity here on a market order. I can open a trade on limit order. Depends what do I want to do. When we talk about a limit order, I select the price and my order will go in the order book to get filled up. Or when we talk about a market order, I don't select the price. It will get the best price from the market. And I just select basically the percentage of my wallet balance that I want to utilize in trade. Or, I can basically go to see my futures unit setting, which is something I'm suggesting to change over USDT, like I'm doing right now in this, tutorial dedicated account. So I can see how much do I go by USDT, which is a lot easier than seeing in quantity of Bitcoins. And then you have to calculate that and multiply and all that. So let's say if I go basically, 50% off the account, right? Let me just say 50% right there. No, that's 50. That's a total size of $500, not 50%. If I'm writing basically the number, it will not be by percentage. Only if I draw the scale line, it's by percentage, right? So if I click on and say 500, it gives me basically directly the 500 USDT form. However, what do I do right now is basically have a 10x position on 500 total size, which means that in order to open up this trade, I will need a margin, and it's written there, of $50, because $50 multiplied with a 10x is a total size of $500, as you can see it at the top. Right, this is how it works, guys. Now you can pause the video and re-listen the parts that you think are a little more difficult. Once again, here is the place you put a final size, which is basically calculated after it has been multiplied. Therefore, if you want to see what's your margin, you just divide it with your leverage size that you have selected from right there. Now, by the way, you clearly see you don't have to divide and calculate anything. It's under the margin. It's written right there. If you open up a long or a short, it is up to you. Long means that you're making money when the market is increasing in price. Short means you're making money when the market is decreasing in price. In the opposite direction, for both situations, you are losing money, and at some point, because of the leverage trading, you get liquidated. Liquidation means that it takes your whole initial margin. If you dedicated an isolated trade, if you go in a cross trade, it takes your whole wallet balance. That is in the futures, not from the entire account, such as spot trading or staking or anything else. We need to clearly know that. People might be scared about that they might lose their spot holdings because their liquidation in the futures. It's not like that. Beautiful. This is pretty much all on the topic. Now I can open up a trade. I can basically handle this process. And let me just clearly do that. Open up a trade of simple, $100. I'll need a $10 initial margin. I'm fine with that. We're doing a market order. I'm going to open up a long position right there. I'll confirm it. It also shares it with me with the estimated liquidation price right there. So 33,163 is the estimated liquidation price. You want to keep in mind that I have an isolated margin mode. So this is beautiful. And the next thing that I want to make sure about is I understand what's happening on the bottom side. I have an open position, BTC USDT perpetual, 10x long, position $99. Average entry price is mentioned right there. Fair price, estimated liquidation price. The fair price is the current price, estimated liquidation price, which means that I'm going to lose the margin I have isolated, which is $9.92. I'm going to lose it, totally lose it if the market is going to the liquidation price. Margin ratio, and this is the margin ratio basically of the whole account. And then the unrealized P&L, which is the results of the profit and loss you have with this trade. You can also increase your margin. So for example, what if the market is going down, but I don't want to lose this trade. I don't want to lose the money. I can increase the margin. And if I increase the margin of this isolated trade, then my estimated liquidation price is going lower due to the fact that I have more room because a larger initial margin that I dedicated. And this can be done from the little pen you have right there. You want to click on that and you want to add or reduce, depends what you want to do. But let's say I'm going to add another $25 and I will confirm. So you guys have the ability that now I have $35 margin. My estimated liquidation price right now is going to be $23,905, much lower than what it was because I offered the platform more money. I dedicated the platform more money to this trade. There is much more room for the price action to go lower, and I'm still having margin basically for the trade. So this is how it works. Now, of course, you can add a take profit and stop loss from right there. This is something that you definitely need to know. Take profit settings, stop loss settings, very simple. You want to sell it at 37,500. It will be sold automatically. All the informations are shared right below. There is a 22% profit on that, and you are going to have a P&L of $2. If I want to sell at 30 grand because it's sufficient for me that loss, I'm going to lose $18 on this one, and this is pretty much all about it. Now I can confirm, and my take profit and stop loss will be added right there. This is a complete position stop loss. I can do basically partial position and then decide on the specific part. Flash close means that my trade is closing through a market order straight away, right? So it's closing in that very moment when you push flash close, it's closing the position on a market order straight away. Price, quantity, close long is a limit order. For example, I want to close at 37,500. I'm going to say in USDT my quantity, I can even go by percentage, let's say 100%, and then I say close long. So when the market is touching 37,500, I'll have an estimated P&L of $2, and my position is going to be closed. This specific order is going in the open orders. Just give it a moment, and it will appear right there. It's just loading up. Their platform is a little bit slow right now. 10x close long on the price that I've mentioned, 37,500, with the whole amount that is on this trade, including the take profit and stop loss orders. That is right there on the next tab. You will be able to see that too. If I want to delete this once, I only have to click on the bin from the right side of it, and it's gone. Very, very simple. Just like the same with the limit order. If I don't care about this one holding it, I can simply eliminate it in the best way possible. Great. So then I'm going back to my open position, and let's say that I would like to reverse. I can reverse. I can make sure basically, I don't have to decide actually on the price when I reverse, but I'm going to jump into a short from the long. Right now, I'm going to jump into the short by selecting the, quantity. I only reverse, and then basically I reverse the direction of the trade. It will close my position automatically, and it will open a position just like that automatically in the opposite direction with the same conditions, with the same size, with the same numbers. Beautiful. This is everything that I must know about futures trading. I present you with a take profit stop loss. I present you with the way you can sell, you can reverse, you can flash close, which means that boom, you have close your trade straight away in a shot. You have your margin dealing. You can increase, decrease your margin. You can set stop losses way before that. You can control everything at any level. It is important to know how and to understand, but even much more important is to know how to trade. That is complex and difficult. So for those of you that are interested in becoming traders, whether we talk about part-time or full-time, make sure to check out my one-on-one coaching program on my page, where I am basically presenting how does it work. An intensive coaching where I'll take you by hand and teach you how to trade. This is something only for serious people, and you can schedule yourself a free conversation on my Calendly page where I can explain you more about it. I'm in this business alone, and I can basically share with you more details as well on my trading business that is completely on commission, no upfront fees. That is pretty much all, guys, on the topic. Looking forward to it. Have a good time. Subscribe, and if you don't have an account on Futures, make sure to sign up from the link in the description area and comments area. Feel free to ask me any questions. Like the video, subscribe to the channel, and ask the questions in the comments area. Talk to you soon, guys.